Well, I would say this, first of all, and I think it's a good threshold reminder, and that is that the bill ultimately introduced into the House by Representative Kanjorski was precipitous in our judgment. In other words, we were certainly not aware of the fact that it was in the planning stages for a long period of time, or that it would catch the wind that it obviously has, and has moved rather rapidly, to be very honest, through the House Financial Services Committee. So in some ways it caught us by surprise, because we were anticipating the debates would be focused upon optional federal charter in one form or another. And when Representative Kanjorski proceeded in this fashion, we were, I would have to tell you, genuinely pleased with the ability to talk about regulatory reform, and we do truly and enthusiastically support the bill. But at the end of the day, we would also have to admit that we were not assured at all that this was going to occur, and have been surprised that it has moved so quickly. I would also have to tell you that insurance reform, at least in my understanding, is not necessarily the hottest topic currently before Congress, although it's critically important to all of us. The housing crisis, the subprime mortgage debacle, the potential failure of Freddie and Fannie Mae, the bailout of Bear Stearns, other financial institutions has consumed most, if not all, of the oxygen in Congress. Now, I might add a footnote to the comments previously made by Commissioner Prager about those particular federal problems and the possibility that they could have occurred when there were federal regulators in place that perhaps may have had the opportunity to oversee or intervene with those particular issues. But I would point out that none of the subprime mortgage issues that I am aware of fell under the regulatory auspices of any federal agency. So we are fundamentally talking about something different when we talk about an optional federal charter, because we in fact are talking about a very robust regulatory environment. And the discussion today that's ongoing is whether or not there should be federal regulatory authority and oversight over Freddie and Fannie and over certain parts of the financial markets that allowed for and created all of these new instruments and moved them with such lightning speed that we ended up at the end of the day in a very difficult circumstance. The nation did as a consequence of those actions. We think this is precisely the right time to enact regulatory reforms that would strengthen solvency oversight for insurers. We think the OII bill is absolutely critical for this reason, and it's a very important reason, and that is that, first of all, constitutionally, it is the United States of America, the government of the United States, that is charged by Constitution with representing the United States, dealing with any other foreign country, to bring about treaties or trade agreements of any kind whatsoever. No other authority, state or federal, private or governmental, is authorized by the Constitution to represent the United States of America. That's number one. Number two, when it comes time to talking about us being able to do business in Europe and in Asia, the first question, of course, that's asked is, do you have a regulatory climate that is consistent with that regulatory climate that we have within Europe or within Asian countries which are providing more and more market opportunities for our products in this country? And the bottom line is we don't. When we have 56 different regulators rather than one, which is present and accounted for in virtually all of the other countries that we deal with, trying to bring together financial services agreements as a part of trade agreements, we end up in a situation where our insurance community, our insureds, our producers, our agents are disadvantaged, and we will not have the same access to European or Asian markets that we otherwise could provide, of course, on a superior basis to those from any other foreign country, because we don't have a similar regulatory regime. And you can imagine what a disincentive that is when we're talking about foreign investment, when they have to confront 56 regulators rather than one. And it's virtually impossible to expect, no matter how well-intentioned, 56 different commissioners, first of all, they're not constitutionally empowered to do so, but to believe that somehow, within a reasonable period of time, they can draw a conclusion on the basis of 56 different jurisdictions about how to proceed with a trade agreement. It's just virtually not possible. So the Office of Insurance Information, we think, is a critically important step to be involved in the advice and provision of direction to those governmental units and countries that are involved in international trade agreements to provide for us the opportunity to export our products while at the same time we deal with the import of products from other countries that have to do with financial services. Secondly, if you take a look at, or thirdly, if you take a look at the flow of capital nowadays, I mean, how many reinsurance or insurance organizations or insurance providers of one kind or another are located offshore? And the fact is that's a lot of capital flowing in a direction away from the United States of America. And part of the reason for that, of course, is that it's a very difficult regulatory environment, and we have to recognize that. At the end of the day, I don't know if optional federal charter is going to occur within my professional lifetime being enacted by Congress. But I would suggest this to you, that it's almost inevitable, because the power of these planetary dynamics, economic dynamics, and the imperatives of economic developments and changes that are occurring are simply going to demand that it occur. And I think that's really what happened with the Office of Insurance Information, is that there were overpowering dynamics that moved Representative Kanjorski to move the issue forward. There were other issues on the table at the same time that were greatly pleasing to the agents like NARAB 2, as well as to those who were involved in surplus lines. All three of them spoke in partial fashion to various different exigencies that exist within the system. All three of them, in one way or another, are forms of federal preemption. And as a consequence, they have all three moved together. And I would tell you there's no way that that's the result of conspiratorial action, because you have different groups supporting different bills at different points in time. What that is reflecting is these overpowering international planetary economic dynamics that we simply can't deny. And my encouragement to my friends involved as the agents who are so critically important to our companies and as producers is to get in front of this and guide it and steer it, shape it, mold it, rather than resist it. And I think that's exactly what the insurance commissioners did when they embraced OII with appropriate amendments, so that they can provide the kind of expert advisory role that will be absolutely essential to the Department of Treasury to do this the right way.